Good morning, guys. Good morning, everybody. How's everybody doing? Happy Tuesday to everybody. Happy great day. Give me a sound check. Let me know if you guys see me on the screen. Let me see if I see myself here. Let me see if the stream has started. Oh, let me know if you guys see me on the screen. Let me see if sorry. I guess you do see me on the screen. Hi, everybody. How's everybody doing? Say hi to me. Tell me where you guys are coming in from today. Love to know what corners of the world you guys are coming in. I have a really, really good show for you. We did a lot of new stuff on the scalping indicator. I'm gonna show you some very, very cool stuff, and I'm gonna talk a little bit about tilt, because there was some big news in the prop industry over the last couple of days, and I kind of want to share my thoughts on kind of blowing up accounts. So, hey, everybody. Good morning, Miguel. How are you? How are you? How are we doing? Very good. Very good. Good to see you guys. Who else is here? Give me some good morning from Miami. How hot is it in Miami right now? Lebanon. Oh, wow. Wow. That is the exact opposite. Hey, Miguel. How are you? Good to see you. Let me see. What does it say? Can't post comments to some. Facebook profiles. Okay, it doesn't matter. Okay. All right. Okay, cool. All right, let me put up the, first of all, business. Make sure you get the 80% discount off Apex. I think it's the last day for July. Today is the 9th of July, where they're basically going to be, I think after this, that this 80% thing is going to go away. It's a ridiculously great deal. I just put down 5 accounts. It cost me $150. I mean, I don't think you could, that's $250,000 in trading capital that you could evaluate yourself on. Whole bunch of stuff that I'm going to talk to you about of how we can configure this and trade with it. But it's just, it's literally the best deal in the business. So make sure you lock that down. Make sure you get those discounts right now on 80% off. The other thing that I wanted to put together was, I think this one. If you guys want to join our service, let me see if this works. Why is this working? LNK. Okay. Oh, there we go. Sorry. This is a discount to just, getting signals from me and Kathy. So I'm putting both of those in there at the beginning so you guys can have it. You can have access to it. Well, we'll talk about it as we go along. So great to see everybody here. I'm going to start first talking about the new version of the scalping indicator that I created, that everybody in my room has. And by the way, if you click that link to subscription, you'll get access to that indicator right away. But it plays on that whole systematized idea of trend, retrace, resumption, but adds a very cool element that I think is you guys are going to find very interesting. So we're just looking at the S&P right now, right, as an example. The cool element that I added is trend up or trend down? How do you answer that question? Well, one simple way is to say, okay, if the quote board is saying green, you just assume trend up, which is fine. I think that's certainly a legitimate way of doing it. But remember, we're trading the 1-minute chart, and very often, trend down, trend up. This is from the beginning of the day. Every opening session, so Asia session, Europe session, North America session, is kind of like almost the beginning of a day in some ways. And you may want to start the bar from a different time frame than just the beginning of the day. So to give you an idea of what this thing does, is we can set this is the starting price, right? And we can set our starting price either at the Chicago time. Remember that S&P opens up at 1700 Chicago time, right? And you can do it even up to a minute, if you wanted to, granularity. And you'll see that once you do that, where's this thing? Once you do that, this is the opening time in Chicago. The trend is up, meaning that, it's above the opening price. You kind of assume the trend is up. However, if you want to say to yourself, what about, how is it relative to the European Open? Is it above or below the European Open? Well, it's actually below the European Open, right? So in that case, the trend is down. Now, why is that important? The reason why that's important is because what you want to, once you determine trend, everything else flows from it. So in this particular case, this actually did not do me any justice today. It actually hurt me a little bit, because if I assumed that Europe was the demarcation line, so now it's 9:20 New York time, we're going to trigger off the European Open. We're below the European Open, right? So trend is effectively down. So if the trend is down, I go in here and basically I either, if trend is up, I go mark it up. If trend is down, I go mark it down. So if trend is down, the way this is configured is it basically takes the second component of our triple R system, which is trend is 1, so trend is down. Then we're looking for a retrace. This is the retrace buy, and then we're looking for a sell, a sell candle. So this is over here. This would be the sell signal, and it sends me. It will send me. You'll see me sending alerts all the time as we're trading here. On the buy side or the sell side. So in this particular case, this particular sell signal failed, right? It got stopped out because I'm trading for 2 stop, 1 target. This sell signal actually worked. It was a 36.25, and this sell signal worked. So the second sell signal did work. But you can see that during the European Open, there was actually a couple of things that worked here. I think this one worked too. This was 36.50. It was only a buck against me, and then it came back down. So there was actually 2 sell signals that worked. And right now, we have another retrace buy here in the S&P, and if it comes back down on the red candle, they'll provide us with yet another sell signal. And a similar situation here in the YM, right, in the Dow. So this is the European Open. Remember, it says here 4.0, 4 o'clock in the afternoon. So YM is also actually this would have been a really good signal. I didn't take this signal because I guess I was setting up for you guys. But this was a great scalp signal, because we're looking for 10 points. It dropped from 64 all the way down to 48, much more than 10 points that we needed. And so on and so on and so forth. So the first order of business you ask yourself is, where am I positionally wise? And that's almost a philosophical question, Okay, who's this? Okay, I'm sorry, guys. Hang on a second. I need to just delete freaking spam over here. What do I want to do? Remove. Okay, sorry. I just, I don't want to see spam in comments. Is 10 points always the general target? So we're scalping. So the targets, and I'll put them over here for you guys. I'm going to use the futures nomenclature. It's 1 point TP, 2 point stop, right? That's the S&P. Then YM, which is Dow, it's 10 point TP, 20 point stop. Okay. Then NQ, it's 5 point TP, 10 point stop. Because we're looking for quick entries, and I'm going to weave in this other point that I want to make for you, Kai. And then finally, GC, which is 1 TP, 2 stop. That's a dollar. We're trading 1 for $2. Okay, so I put those in there for you guys to look around, to make it clear to you guys. And I guess somebody's asking about crude. Sonny, I don't really trade crude. Not that I can't. It's just that, there's already too many instruments that we trade. But if I was going to trade crude, it would be a 10-cent TP and a 20-cent stop, okay, for CL. So, you could certainly analyze CL of this. Why didn't I just use a larger time frame with moving average to see the trend? Okay, I had this conversation yesterday in my room. So great question. I mean, it's a great question. I think a lot of people always ask that. First of all, give me a moving average that you'd like me to use. I'll be happy to put it on there, right? Just even yesterday, people wanted me to put a VWAP on there. I put the VWAP on there. I can do whatever you want. It doesn't matter. Just you can give me a 15-minute moving average, whatever, stuff you want. My point being is, once you see you guys feel free to suggest and feel free to put out whatever values you want. I'll be happy to show it to you. My point is that when you're scalping, right, and generally when you're trading, my view is the less derivative data, the better. So that's a fancy way of saying pure price action, as little indicators as possible, right? So, because why? Because every indicator is showing you an average, not the true reality, but a distorted reality of the past, right? It's a filtered reality based upon accumulation of values that are then averaged out. Anytime you're using anything that is an indicator, it is lagging by its very definition, right? Everybody agrees with me? Give me a yes if you understand that. Give me a yes if you understand that, right? That every indicator by its intrinsic definition is a lagging piece of information. It tells you past averaged out, right? Is that clear? So as you can see, I only have one indicator, the 8-period SMA, as the only, not consensus, but the only, what's the word I'm looking for? Jesus Christ. Whatever. I forgot the English word for it. I can't believe I'm blanking out. It's basically my only acceptance of a derivative, just a very, very simple one. Everything else, I want to do pure price action. So the reason why I'm using the actual opens, the actual close, because that's actually what the price is. That's actually what the price was. And this comes, from my long history of trading the institutional market in FX. When we were trading FX, you have to understand that when you're trading FX, and if you're kind of like, if you walk into the dealing room and you talk to the dealers, and you talk to guys who are moving billions of dollars instead of just a couple of ticks, the last thing that they look at is RSI or MACD. I mean, they'll look at it, for curiosity's sake occasionally, but remember, everybody who's got money, who's actually moving the market, is moving it on prices. They're not moving it on derivative data, right? We have NQ sell. Let's see. Hang on a second. I think I have a sell. Oh, we have an NQ. I have a NQ YM buy. So we're gonna sell the YM here. No, sorry. What was that? Was that the NQ? That was NQ, right? Let's sell that. I'm a little bit late, but that's okay. Oops. Let's sell that. So reserve your questions about my size, because we're going to talk about tilt and everything else in just a minute. But we'll take it. We got a signal on the NQ. This is the signal. Basically, was that 724? So we're looking for 19. If we can make 19, we'll be good. Let's see if we can make 19. I have 17 here because I came in late. So maybe we'll move it up to like 1850 just to give ourselves a little better chance of execution. Anyways, the point being is, the reason why I don't use moving averages is because they will delay my analysis of where trend is. Remember, all I'm looking for is, am I truly up or truly down on trend here? It looks like, boom, we're done. We're done on that. You just sort of, the perfect example of trend, retrace, resumption, right? Downward trend, retrace over here on the retrace buys. This is the MNQ, so you can't see it clearly. We're using the big contract for our signals. So retrace buy, perfect signal, boom, done. Right before the open, nice and clear. We keep it simple, right? So Rock strategy is telling me 21 EMA and 38 is EMA. Oh my God, Jesus Christ! With a programmed, Yeah, Rodney, if you want to, Rodney is asking me about, can he join my prop coaching program? Today is Tuesday. It's actually a perfect day to join because today is the coaching day for prop trading. I'm putting up the link right now. If you guys want to join it, it's right there in the comments. So if you want to join my prop trading program, absolutely do that. Okay, we're popping up 9:30. Remember, this is the European Open, so we're still not really rocking or not really creating a clean, clear move here. We definitely dropped off. We're up off the European lows, right? But this is the European Open, just hovering around here. This is on the Nasdaq. This is the European Open on the S&P. By the way, I missed the sale on the S&P. Sorry, guys. Too many signals here. And look at this signal. Oh my God, fuck. And I missed the signal on the YM. Well, I'm explaining a lot of stuff to you, so I can't always catch it. We caught the Nasdaq. I should have caught all of these things, but be it as it may. Point is that the signals are just awesome, right? I mean, the signaling here was really, really crystal clear. And the thing is, we're going to get like 10 of these signals in the next 3 hours, so it's not like I really care about. Yes, there's big news this morning. You're right. We got the 10 o'clock news with Powell and Yellen doing a double whammy testimony. Powell in front of Senate, Yellen in front of House. We'll see if they make any kind of news on that. But the general idea here is, my whole idea is I'm showing you how to hit the forehand, to use a tennis analogy. It's Wimbledon time, so we're all focused on Wimbledon, right? It's also Euro 24 time, so but I'm nowhere near as I used to be a lot better in tennis than I was at soccer, or as European, say, football. So we were going to use a tennis analogy. And my whole idea is to have you hit the proper forehand. The proper forehand is trend retrace resumption. The triple R system. Oh, I got an NQ sell. Let me see if I got an NQ sell. Ooh, looks ugly. Okay, and so NQ sell against. Look at this. It's moving against the European Open. This is why I'm holding off. See, it's the European. We're above the European Open. That's no longer a sell mode. That's actually a buy mode. Look at this. Look at this pop. So lots of volatility. I'm happy to stand back. And here's how the actual level helps me adjust my analysis of the situation, right? And helps sort of keeps me from taking unnecessarily weak trades, right? This is a pretty weak trade. This is a very weak trade to take to the short side because we just broke the European Open. We're actually now effectively in a buy mode. So we're going to reconfigure ourselves and start looking for buy possibilities, right? And furthermore, we're now, right? It's 9:30. It's 9:30, and now we can not only update kind of our analysis, we can update our levels. This is the other cool thing we can do. Watch how cool this indicator is. So we can go to 9:30, right? Sorry, 8:30, because this is Chicago. We're in Chicago time, not on New York time. It's one of the quirks of futures is that we have to use Chicago time here. So here we go. So now, see, I've updated my kind of stop level or my trend level, if you want to think about this, now to the 9:30 level. And we're clearly above the 9:30 on this. Are we above the 9:30? Yeah, we're above the 9:30 on the S&P. We're not. What the hell is this? Really? Wait, hold on. What's going on here? Market up. This is a 9:30. This is the. Why is this? This is weird. Sorry, let me just figure this out. So we were down. This is 9:30. This is Nasdaq. This is correct. Why is for some reason this? Oh, the Dow is. It's still. Oh, this is 9:30. We're still down. I'm sorry. The Dow is actually so down. I didn't realize this. The Dow is actually so down so that it's effectively. Now it's below this is the 4 o'clock level, and now it's probably going to go below the 9:30 level. So it's still, the Dow is actually a sell trade instead of a buy trade. So Dow still remains a sell trade. So this is a brand new indicator for me as it is for you. So I still have to kind of get myself adjusted to it. But anyways, it's it's kind of sending us a sell signal here. And as a matter of fact, if we want to, we can putz around with a small version of a sell signal. Okay, I'm going to sell this right now just for shits and giggles. It works. It works. It doesn't work. It doesn't work. I really don't care because I'm just kind of trying to trade to trend idea, but I'm probably going to eat this trade. Yeah, I'm going to eat this trade. Sorry. This was a tiny little pop on my an impulse trade on my end, which I shouldn't have done. But now we can do it again. I think now we have a much better entry. Okay. Now I have a much better entry. Let's see if this actually doesn't. I didn't wait for the candle close when I came in on this trade. Again, I'm fooling around on this trade. Tiny little trades. I'm going to explain to you why I'm trading so small, right? And I'm kind of fooling around. Sorry, guys. Sorry. I promise you, I won't make any more trades until I have an error, because I was just really fucking around with this because it didn't have an error, it didn't have a legitimate trade, but I just kind of got myself, emotionally involved. And this is actually going to dovetail into my next point that I really want to talk to you about. So first of all, let's switch around to the buy side. We're buy side on Nasdaq, buy side on the S&P. Now we're going to look at actual real structures. So we're buy side on Nasdaq, S&P. We're sell side on the Dow still, although it kind of just plays. It's kind of just playing to. Let me see. Sorry. I have to switch it around. Okay. We're sort of above this is the 930 open, right? So it just keeps crossing to the downside. I'm gonna wait. If this candle is red again, I'm just gonna go again. Horrible. Do as I say, not as I do. But I think this is going to be an okay trade. Let me see. Okay, I'm going to short this thing. Let's see if I can. Yeah. Okay. Now I got it. I finally timed my trade properly and got that working. Anyways, this is just me fooling around. This is a kind of a derivative of the of what I like to do. The derivative is if it crosses. You see, this is the 830 open, right? And it kind of couldn't really hold the 830 open level. It dropped below it. So once it drops below it, it's kind of like a moving average cross. It's a really good trade to to short. Conversely, when you're going the other way, if this thing kind of goes through the 930 open, right, like this, it was actually a really good buy. That's not the trade that I like to do. That's not the classic setup with the arrow and with the indicator and everything else. But I just wanted to putz around, which brings me to the most important point that I want to talk to you about today, because this is something super interesting and also super important that happened. So, but before we do this, hang on. I know it's an NQ sell, so it doesn't matter because we're above it doesn't matter. We're above trend now, so we're not taking any sell signals. So we're just going to reconfigure ourselves to the buy signals, okay? And just wait for a buy signal. So what I want to talk to you about today, which is really interesting, is many of you may know trades by Matt, right? Actually curious. Give me a yes if you guys actually know trades by Matt. Does anybody know that guy? He's a very popular YouTube trader. He does a lot of live trading. Great, I have a lot of respect for him. Great guy. We're losing our open right now, so all this shit. I'm just watching this again. I'm just watching the open line here for a second. Nobody knows, but some people know. Okay, so one of the things that that trades by Matt, he also trades Apex, and he had managed to collect $300,000 in payouts from Apex, right? Massive, like he trades 20 accounts at a time, really does a great job, blah, 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 so on and so forth. He was like on an 85-day winning streak. 3 days ago, he posted a video saying he lost it all. He blew up all his accounts in 3 days. He went on total tilt, right? Which kind of sad. I mean, nobody should cry for him. He's done well. But It was just mind-bending, surprising at how quickly and how fast he blew up his money, right? And that, believe me, nobody's here to throw stones at glass houses. Nobody has blown more accounts than I have, right? But it really, 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 really made me think, what is the single biggest reason that we blow up our accounts? As a matter of fact, this is a good question for a survey. Let me put up a survey up here for a second. Let's see if I can do. Can I do a survey from here? Hang on. Let me see if I can do. I think I'm going to be able to do it from here. Hang on. Let me see. I think I'm going to do it from my other channel. I want to put up a survey. Okay. So I'm going to start a poll. What is the biggest reason for blown accounts? And I'm going to give you 3 choices. Discipline, bad strategy. Oops, I can't spell. That, of course, is. And then we're going to add another one. Okay, I'm going to give you 3 choices. Start poll. I'm really interested in what you guys have to say on this. Okay, let's see how it these up. So yeah, everybody has lots and lots of very definitive ideas about why you blow accounts, and I'm going to argue to you. I mean, fill out the poll, because we're gonna look at all this stuff. I'm going to argue to you that almost all of your ideas are probably wrong. And there's really only one reason why everybody blows accounts. But let's take a look at what's going on in the market right now while everybody's polling. Dow is underneath, so those are negatives.
The stock is currently testing 52-week highs, according to the most recent data.
Alexa, stop! Oh my God, Alexa just decided to turn herself on. Okay, we got no signals. We're kind of just chopping around here, so on and so forth. Let me see how the poll is going. It's really interesting. No, I don't want to end poll. I want to look at the poll. What is this? Where's the poll? Okay, so 43% say discipline, 10%, 11% say bad strategy, 46% say size. Right? Let's go. Let's do some more voting here, guys. Let's tell me what you guys think. I'm actually also going to. We got a green candle coming up over here in the S&P. I'm going to buy this one. We're above the U.S. Open. It's not a trade. It's not an arrow trade. Again, I'm putzing around, but I'm just looking for quasi decent trade entries. So I'm trying to trade with trend in the resumption of the trend. So we'll see if that actually plays itself out. So how's the poll going? Everybody's saying discipline. It's not discipline. Trust me, guys. It's not discipline. Nobody has discipline. Oops, including me. You see, I don't have any discipline. I don't have any discipline whatsoever. I'll be the first one to admit it to you. But if I keep doing what I'm doing, I'm never going to blow up my account. Okay. And that's the key. That's the key thing that I kind of want to impress on you guys. As you can see, I'm fucking around here, right? Just because I just want to do trades, and I'm taking like class C grade setups. They're really not working. The market is, it's 15 minutes into the open. We're chop city because should I even be doing anything? 15 minutes in front of Yellen and Powell. Of course, I shouldn't be doing it. I'm just putzing around. But it doesn't matter. The point is none of it matters because I will never blow up this account. So the reason I'm never going to blow up this account, and this is the only thing that matters in terms of whether you blow an account or not, right, my friends, is actually the third choice on that poll. the choice that is size. Because what I'm doing right now is I'm trading micro lots on a $50,000. I'm trading $10 trades. I'm taking $10 risk trades, I could have 10 of these in a row. I mean, obviously I'm not going to have 10 of these in a row. I'm not that much of an idiot, but I could have 10 of these in a row and I'm down $100, right? So, and I'm doing this for two reasons. One, to prove my point to you about the importance of size in being able to control the chance of blow up, right? And then the second, and even a more important reason, is the importance of practice. When you're learning how to hit a forehand, right? The first thing that people do is give you a slow ball. It's a slow ball, right? You learn how to step into the ball, right? The ball comes in. You got to get the timing right. The timing happens on very, very slow pace. Then they increase the pace a little bit. Then they hit a little bit more. They hit a little bit more, right? Then they try to move you around the court and you try to hit it on the run, right? And then they start really moving you around the court, like, after 1,000 or 10,000 or 5,000 or 1,000,000 strokes. When you've gotten your timing right, when you've gotten that whole muscle memory right? And it's the same thing in trading. It's all muscle memory, right? It's all muscle memory. So for you to kind of master the triple R setup, right? The first thing you want to do is do it on the slowest time frame, which in trading is the smallest size. It's, speed and size are the same thing. You get into physics, it's, mass equals velocity, blah, 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 same bullshit. The smaller the mass, the lower the risk of crash, right? So that is my key point that I want to tell you. I mean, it was shocking to me that he blew $300,000 worth of profit in 3 days. And I said to myself, I'm never going to try to put myself into that position. I would rather make $2,000 a month off a $50,000 account for the rest of my life than than make $300,000 in 2 months and then blow it all in 3 days, because I am here to trade for the rest of my life. I love the game. I love the P&L. I don't need $300,000 in a month. Okay. What I want to do is be able to make 3 million over my lifespan or whatever, whatever the pace you want to do. But the idea is, this approach is a much better approach, right? Than the approach that, I'm going to just bet it all on red. And yeah, you're going to be a player for about a day, but I want to be a player for life. Boom. Thank you. That got done. Right now, got done, doesn't get done. It doesn't matter to me. It's a small trade. I took a basic continuity trade, which is really, just practicing my stroke here. Nothing is going on. We got 13 minutes before these guys testify. Markets are like right now. It's not even worth it. Take any frigging signals. We have what do I have? I have a YM buy signal. YM was not even in buy territory. YM is in sell territory. So it's nothing even to trade here. But you get the idea, right? I'm trading micros. I could not possibly blow myself up, right? Now, once you get comfortable, at trading micros, right? So here's the other thing that I was going to say. Overtrading frequency and size. And yeah, so again, overtrading, absolutely no, everybody overtrades. But here's my point to you, CERN, and nobody overtrades more than me. I could do 100 trades a day doing this bullshit. And I've done that, 100 trades a day, and I will not blow up my account. So overtrading is not the answer. Again, it's size. It's size first and everything else a very, very, very distant second. And that is kind of what I wanted to show you, because the journey that I kind of want to take you guys on, the more thoughts I had about this is, eventually I wanted to do trade copy. Like a lot of people, Apex gives you great opportunity. It's very, very cheap to buy accounts. They have a trade copier. You can replicate your trades. So my thought was, and we're probably going to do this, I don't know if we're going to do this week, but maybe starting next week, is we can trade the master account, this account, at the tiniest possible size, right? The next account, we may trade at one size larger. So instead of, $10 trades. I may take $20 risks on the other one. The third account may be $30 risks. But remember, here's the thing. I don't see any of the other accounts. Let's say I have 5 accounts. I have one master, 4 other accounts. I'm not watching the other accounts. I'm not having FOMO over the P&L in those accounts. I'm utterly unaware what those accounts are doing. And that creates a great mental barrier for me to just basically do what I should be doing on this. If I have a couple of negative trades, I'm not going to sit there cry and just go all in on 10 lots for $1,000 trade, right? I'm just going to work my way out of it, and that hopefully ricochets or expands across the copy accounts. With basically, I'm trying to create very good behavioral trades that basically replicate themselves to all these other accounts, which I don't see, and therefore are going to be much more effective on their P&L side than just my master account. And I think it's an interesting trick. So I'm going to try that trick psychologically. And somebody says it all comes down to your size allow you to make a living trading. Yes. So if you are desperate to make a living trading if you're desperate to win Wimbledon without knowing how to hit the forehand, you will never make it to the qualifier, which is why everybody gets knocked out, right? So if your job, if you want to learn how to make a living in trading, you need to learn how to trade for $1 a day, right? That's what I'm saying to you. That's the irony of the whole thing. If you can't hit a forehand well on a slow pace, don't even bother. Don't even bother trading 10 lot positions, because just like Matt's been trading forever, it took him 3 days to lose what he built up over years, right? And that's going to happen to you too. So my argument is, if you want to get to that goal, it's not going to take you a week or a month, okay? And hopefully. So what's going on over here? 51s, 52s. We got buys on the R's. We got NQR buys. Let's see NQ. Okay. Buy signal on the NQ, but it's literally right below the line. S&P is green. I got 8 minutes before they testify. I'm not gonna take a trade. You can see the market is doing literally nothing in the first half hour of the day because they're just waiting for that testimony. So let's wait till 10 o'clock. Let's see when there's actual real trend develops. And the other thing we're talking about this is that real trend in the markets, in my opinion, is at 10 o'clock to 12 noon, right? It's the last 2 hours of the European Open and the first kind of 2 hours of when the bullshit of the first half hour happens. So I'm really, really interested in doing a lot more live trading with you at the 10 to 12 hour time zone. Probably not this week, but maybe next week. We're going to try to experiment with that, with that idea. Because I think, every time I'm trading 10 to 12, there's literally 10 to 12 winning trades that I can make during that time frame. Because that's what trend happens. That's when you really get movement. So, the line is this line over here. This was the line, I think, at around 4 o'clock in the morning, and this is the line at 9:30 in the open. This is the opening price line, right? So we're above opening price line, so we're assuming we're positive trend. Basically, that's all we're doing. We're assuming positive trend, and then after that, we configure our indicator to give us only positive buy signals. Retrace, resumption signals. So I was tempted to buy this green signal because that's a resumption signal of the trend. But I'm trying to be very good myself and not really fuck around in front of the testimony, which is fine. And we have the same configuration here on Nasdaq, right? Nasdaq is actually giving us a signal. All right, screw it. Let's fucking go. It's a small trade. Let's do it. Let's see if this works. Okay, long this 40.75 is my target. Maybe they run it in front of the testimony, or maybe I'm just going to get flushed out because I'm trading in front of news. We don't quite know, but it's just, again, it's a small bet for me. So I'm not gonna, cry about it if it doesn't work, and we're there and it works. Most of the time the arrows are beautiful. There's obviously occasionally you want to be mindful of the news and everything else. And I have been mindful of the news. So I was careful, but you can see most of the time I'm knocking trades. I'm knocking trades out. And if you are modestly selective, you're going to be, my goal is to be 75-25 on all these trades. Again, like I said, practicing my forehand. Until I get to 75-25, I'm not increasing my speed, right? I'm not increasing my speed because that's the accuracy rate I need to have a belief that I'm kind of doing a good job. But even then, I'm not going to increase my speed on this. My master account is always going to be tiny. And the reason why this is good is because even if you go larger on your copy accounts, and maybe some of these accounts are so large that they get blown out because you run into a bad streak, you still preserve your like the one account through four, right? Maybe account number 5 is the most levered account, the largest levered account. Maybe that one gets blown out on a bad streak, but you still preserve 1 through 4, and then you can just rebuild them and rebuild them and rebuild them. And that's that I think is a much more intelligent way of trading than all in. And nobody loves to do more all in more than me. Everybody loves to do all in. All in is a lot of fun, but all in is gambling. All in is just you playing Vegas. Sometimes you hit red, sometimes you hit black, but the odds are always going to be that you will be a loser, right? And what I'm trying to do is to make sure that the odds are that you'll always be a winner. And if you want to be a winner, then you trade small and you never trade all in. Doesn't matter how confident you are. It looks like I thought they were already testifying 4 minutes beforehand. They're just front running, hoping that these guys are dovish. That the remarks are dovish. Maybe they're going to release the remarks. Let's see if they're going to release the remarks on news. Let's go over here. Let's go to Financial Juice and let's see what they're saying. They haven't released the remarks yet, right? So what time is it? We got 4 minutes. So we'll see. We'll come back to the conversation. But it's, you guys following what I'm saying? Are you guys kind of digging what's happening here? Interesting. I'm looking at the poll numbers now, and feel free to. How many people have voted here? Yeah, it's almost half the room voted. So it's interesting. We're still breaking down to between 42 discipline, 40 size, and 17 bad strategy. Bad strategy, literally the least important thing. Yes, bad strategy is obviously not a good thing, and you always want to have a good strategy. And obviously, I'm trying to always to improve my strategy. But strategy is always a dynamic structure, right? And really, there's only 2 strategies. All strategies just devolve into 2 types of trades: continuation trade, which is what we trade, trend, or reversal trade, which is you either believe the price is going to continue in the direction of the trend or it's going to reverse. And you're basically looking for all sorts of clues, body language from the market, all sorts of charting stuff that gives you an edge in determining, which side you want to bet on. So, we like to trade trend. I mean, I like to trade counter trend, but nobody else does. And since everybody wants to, since I'm doing live for you guys and I'm trying to help you guys learn how to trade properly, I'm basically designed the whole trend system for you guys to trade. I love to sell tops and buy bottoms, which is a stupid thing because frankly, the trend system works so much better. But, everybody has their personality weaknesses, right? Anyways, the point being is that size, I think, is just a conversation that nobody really talks about because everybody always talks about money. Money is literally the last thing that you care about in trading, okay? Money is a byproduct of process, right? Just like in any other work, money is not, like if you're an artist, you're creating art, right? If you're an engineer, you're creating a product, right? If the product is good, you create, like people who create cars at BMW, at Tesla, at Mercedes-Benz. Okay, the engineers, the people who actually create the product. Okay, they're not thinking money; they're thinking product. The money comes from the product, just like the money comes from the process. That's the key thing that I hopefully want to impart on you guys. Somebody says, I'd love to see the trades in an account that has worked through the PTP and moved the money real account. Yeah, there's a lot of people in my PTP class that have multiple funded accounts that have used, variations of my techniques. And of course, the beautiful thing is that, I create a structure. Many people create their own derivative of the structure and trade their own size, their own approach. Sometimes very far. In fact, I would say most of the times much better than me, because they have more time to focus, or they're just better traders. So yeah, there's a lot of that. That's why, if you guys want to come into PTP, let me give you the link. Let me give you guys the links basically for both. Here's the link to Pass the Prop Academy, and here's the link to Apex, so that you guys can get the 80% off. Really lock down the idea. My sort of favorite thought on all of this is, you want to take 50. It's up to you. A lot of people like to take the $250,000 accounts. I like to trade 50,000 because I find the risk reward ratio there is very, very good. It's like you need to make $3,000, $2,500 to the downside. It's very, very, very equal. It's basically an equal risk reward ratio, and I like trading that. And trading 5 of those really gives you lots of flexibility. You can trade one at a time. You can trade. Where's my thing here? I just opened them up like right now, so I don't even think I have any. Yeah, this one I just started, and there's like two more that I just haven't even traded yet. Because what I'm probably going to do in all of these accounts is I'm going to put them on Trade Copier, because you don't want to trade 5 separate accounts at the same time. But I'm going to put them in a staggered ratio. So if I'm doing a good job, the largest account is going to have the fastest P&L. And we'll go that way. Now, what's interesting, by the way, is what's very cool about the opening minute line, or the opening session line, is that on days like today, you literally see the bullshit that is happening. You literally see the market is just not moving off its opening price, right? I mean, we are just up like 20 points up, 20 points down. There's nothing going on here, right? And that already tells you a lot more than any indicator can tell you. It just tells you that everybody's sitting on their hands. 10 o'clock. Let's see if we got any news. Okay, Powell, more good data would strengthen our confidence on inflation. Elevated inflation is not the only risk we face. Policy rate cut is not appropriate until the Fed gains. Oh, fuck me. So he's being a little bit hawkish on this. We have made considerable progress towards 2% inflation. Recently, monthly readings show modest further progress. Not exactly a screaming dove, is he today? Yeah, U.S. So we'll see. We'll see what Yellen says. But I guess everybody's just looking at Powell. So markets are kind of let's see. Let's see how the interpretation is here. We are holding the lows. So what I'm watching right now is, let's get interested in here. It's about 19 seconds here. We're kind of holding the lows. We're holding the 8-period SMA. The index that is the most sensitive to Powell comments is always going to be Nasdaq. It's always the most interest rate sensitive index. It's kind of holding green, and it's got to stay green for this whole candle in order for me to get long here, and it does. And I'm going to get long here, and let's see if I get continuity, or if I'm going to get stuff. Again, this isn't an arrow candle, but it's of the variety of what I'm looking for, because I'm above trend. I have continuity. I don't have retrace in this particular case. But I'm taking a small chunk of this. Let's see if I can get up to 55, or it's just it's going to retrace on me. Not a class A trade. I would say this is a B- trade, but good enough on my smaller size for me to kind of take. Let's see if it can pop. Let's see the same thing on the S&P. What's the S&P doing? S&P is considerably doing better. S&P is actually a trade for me. Let's make the S&P. Ah, shit. I'm late on this. Okay, we're going to chase the S&P a little bit. So S&P also not. I don't have an up arrow on the S&P, right? We don't have a retrace situation here. So we're basically just trading continuity. Based upon the fact that we're above opening level, we look like we're kind of strong. And I guess the market had a knee-jerk positive reaction to it, came back down on his less than mildly hawkish comments, but kind of feels that whatever he's saying is full of shit, that he's still going to cut rates, or it doesn't really that matter much. There's a lot of positive momentum in the market, and they're trying to keep it up. I'm just trying to trade it in a frankly, less than perfect setup, but good enough for me to want to take the trade here, given how things are going. Where am I over here? Oh, did I get done? I don't even know what happened to me. Oh no, sorry, I'm on the NQ. No, I'm retracing on the NQ, and I'm retracing on the micros. No, nothing is working. It's it was a fake out, and it wasn't obviously it wasn't a great trade. I'm just trying to show you a couple of setups here because I don't have any legitimate setups here, but it's fine. We're gonna wait until we get better quality trades here. That's actually interesting. By the way, the other thing is that gold. Gold is really negative here. There's no. I haven't even looked at gold here. So gold is on. So this is gold is actually on a 9:30 open, because this is the other crazy thing about futures is gold opens on New York time, and S&P and Nasdaq open up on Chicago time. So you have to be mindful. So this is the gold market open. We're below the gold market open. Gold also sold off. I mean, nobody likes Powell's comments. He was really kind of negative here. So we're obviously not. Not really doing well. And now we're kind of breaking the 830. Now I'm just gonna sell this. Just sell it on a momentum basis. Oh, I just missed it. Oh, I hit the big contract. Sorry, guys. Speaking of size, look at me. I ate the big size. I'm sorry. I was rushing. I wasn't looking at the contract. I should have sold the small size. It's fine. Again, not a big hit for me because even at this size wasn't a big shot. But here, let me see if this holds. I think it's going down. Come on. Let's see if I can make this back here a little bit. They really don't like this. And you see Nasdaq is also selling off. So we're going to go Nasdaq on the sell side here. I'm just watching the break here. The Nasdaq gets done. Where's my S&P? S&P is still crawling against me. Sorry. I'm getting stuck on the S&P trade here. On big size, unfortunately. Sorry, my bad, because I'm hitting the one drawback about the indicator that I have is that the indicator takes the signals on the big size and I have to take it on the small size. So I think maybe what I need to do is just maybe move this mistake. You're going to make mistakes. Sorry about that, guys. So S&P kind of tested the lows, came back up. This wasn't a trade of mine. This was me just free basing on the opening right. So on the S&P, how much retracement do I look for? The retracement is it's not a function of size. It's a function of like how these buy labels are calculated, which is like a proprietary signal. All right, so you know what I need to do? I just realized if I have the micro right underneath the macro, then I will have a much easier. I had them too far away on my screen. You learn on the trades. But anyways, where am I? So Dow is still down. Doesn't have any signals for us. S&P really popping around. I still think it feels like unless he says something different, it really feels like the market wants to take this down. But for right now, it's an uptrend, right? And we have to reconfigure ourselves it doesn't matter what my opinion is. The market right now is showing an upward bias because we're above the 30 open, and the same story on Nasdaq. We're above. So, we have to, although I see Nasdaq is really struggling with the 30 open. Let's take a look and see what goes on here. See this. This is the opening line. We're really holding the U.S. open line on Nasdaq here. Not a setup for me, but I like trading this as an idea. But it comes back up. All right, fine. Good for that. If he gets green, we'll go long. S&P meantime coming down. So I'm going to watch the S&P here. These kind of knee-jerky reactions are, the market listening to whatever he's saying, but he doesn't seem to be super dovish in his opening comments. So the markets don't really love this. You see where the sellers are trying to come in, the buyers are coming back to buy it. There's a lot of choppiness. This is by far the worst time to want to trade, and we don't have any signals here either. But we will. Because I'm trading Apex, which uses futures versus CFDs. We're using Apex prop trading. Okay, we're getting green now. This is interesting. And Nasdaq. Oh shoot! Sorry guys, I'm late. I'm late on the trade on the Nasdaq. But let's give it a shot. It's very late on this trade because I was watching the S&P. This would have been, we're above this, and again, that works nicely. Let's see if the MES works. That's at 27 seconds, a big pop on the MES. So it's 25 seconds left here. I still have to wait for the candle to close. One of the reasons why I don't like, why I'm very, this is small size, but why I'm wary of like candles like this is because you could be right on the trade and still lose money simply because the candle is so big that it can retrace on you. So just be mindful of that. So I'm coming in here on this candle in 2 minutes. Let's see if it extends. But be mindful that when you have a candle like this, you always have to be aware that you could be right on the trade and still lose money because of the big extension that it has. Ideally, you want it to be just above the moving average. But maybe this one will take us up a little bit higher. Maybe the market is hearing something that, and it does, and we blow it up. So we recover the trades here a little bit, and this is what I mean about not getting too upset about First of all, I took a couple of really big cowboy trades that were kind of stupid, but the point is that as long as I'm trading within small size, I'm not going to be really hurting myself in any kind of way, shape, or form where I'm going to be losing money. Meantime, by the way, Dow is just this is the 830 open on the Dow. You see we're well below, and I need to reconfigure this to the sell side, but I don't have any sell signals here. But but this one is just a one-way trade to the downside here. Hopefully you see how important it is to use the opening I don't know what to call it, opening minute line, like the New York open line, the New York open line, the European open line. I guess that's the right way of doing it, as a orientation of where the flow is going, right? It really helps, right? And it really helps to move it along. Nasdaq also, had a really nice big pop. So now everything is kind of oriented. Now we're going to put ourselves. Now we can comfortably say we're market up, and now we can just have to be patient. Maybe next 10, 20 minutes, we'll see some arrow signals, and those will be really good signals that we can take, to trade ourselves. Let's see if there's any comments here. Oh, I know, it's like a lot of comments on the bottom here I'm missing. Okay, now I'm caught up on the comments with you guys. Let's just also see for a second what the comments have been, policy rate cut is not appropriate until Fed gains ground. Oh, Jesus, he's being such a dick. Okay, we have made considerable progress, blah, blah, blah. Labor market conditions have cooled but remaining strong. So he's really not telling everybody that September will be a cut, but maybe the market is just, looking through his words. Reducing restraint too late or too little. Unduly weaken the economy and adjustment. Maybe that's what the market jumped on, because this is the money line. This is him basically saying, if we're too late, we're gonna hurt the economy. So maybe the market is thinking, while he's being cautious, he's kind of implying that July no change. Whoa! What the odds? Cut 75% basis cut. So really went up. The market is pretty much of the opinion that there'll be a cut in September and even one in December. So it looks like that's why the equities recovered, because the odds of a rate cut remain in place. He hadn't really changed expectations much. We'll see how much more upside we have here. But the great thing is we have this orientation line, and it will tell us, just how much the market wants to rally or not. Obviously, the market right now, very tepid, really not really rallying much, right? You can see that, we're just sort of really, really quiet. Anyways, what do you guys think? I mean, you guys like the new version of the indicator? And obviously, if you are not like me and not taking every stupid trade in the book, if you're just patient enough, like this is what I'm trying to tell you, is that when you have the indicator in your fingertips and you're patient enough to actually look at the arrows, which happen about once every hour or so, you get really, really good quality entry trades on almost every single instrument. This is the NQ. This is the ES. This was pre-New York Open. When we were above the European Open. This was a nice clean trade. These were all buys. So if you were anchoring off the 4 o'clock Open in prior to the New York Open, I'm going to show you where the line was. And actually, I think the line was below. This was below the European Open, right? So if you were below the European Open, you'd be down on the downside. And you had some great sells over here. This was a winner. This was a winner. And by 9 o'clock, you pretty much want to stop trading because you're getting for the New York Open. So the point being is that you get really nice quality signals off this thing if you're just patient enough to just look for them and hit them hard. I'm obviously trading a lot more than just these signals, but the signals themselves, I think, are super good. And you can do the same thing. Here's the YM. On the YM, which was the weakest of all, right? You see they really were just awesome signals all the way down, because this is the European Open. You're well below the European Open. It's all negative trend, and you can see how well it trades to the downside. And of course, there are guys in my room who will make far more money than I by looking at this indicator and by actually doing a swing trade. So they'll take the short over here, and instead of just trading it for 10, 20 points, they will trade it for maybe 10 points for a little bit of the position, and then just simply hold the position. If you did, this was a 150-point move to the downside. And if you're that kind of a trader, you really capitalize on the indicator. So I hope you guys really like all of that as a trade condition. So we're almost done. Let me ask any final questions here. Anything else that's on your mind? I'm happy to answer anything. Let me give you one last Apex link. Be sure to sign up for that. And one last pass the prop link if you guys want to come trade with me. I'm happy to do this with you. Okay. Otherwise, we're going to come back tomorrow. We will see, how much more. Hopefully, tomorrow the markets will be a little bit more lively. But most importantly, I'm actually going to trade the CPI with you guys on Thursday. So definitely come back for that. That's going to be the big event, because that's really going to. If CPI is cold, it doesn't matter what Powell says. They're going to be cutting, and it's going to be very positive. CPI comes in hot, we're fucked, and it's going to be a very negative day for the markets. The markets are way overbought. If CPI surprises to the upside, I think it's going to be like a 1.5% down day, and it's going to be a really interesting trend day for us to trade. So hopefully we get some price action on Thursday. But come to me tomorrow. Any final questions? Anything else? No. And hope you guys really like it. I will see everybody tomorrow. Thank you for hanging out with me, everybody. Everybody have a great day. Take care.